the bigger part of the conversation is, does this number really even matter as it relates to Fed policy? And I think the answer is no. I mean, I don't know how much the payroll report matters going forward. It's not just this number. I mean, if the Fed is clearly far more focused on inflation at this point, so it's probably a pretty reasonable argument that next week's inflation report matters more than this payroll report. But I think the undertones of this report will certainly show that the labor market remains in really very rock solid shape. Continuing to sort of claw back a number of folks that have been sitting on the sidelines. For now, I stress for now, keeping wage pressure is pretty elevated. I think that dynamic could change as the year progresses. But again, I think it's a slightly moot point at this stage, given the fact that we're now well easily within full employment.
Yeah, and you said it, I didn't, by the way, Tom. And I was kidding because I kind of said it. You don't want to throw cold water on the coverage. It's going to be a big part, no doubt, of coverage coming forward.
About that.
But listen, let's be honest with the audience. I mean, that's our job, right? Be truthful and honest with the audience, which is that it probably doesn't matter at all. I mean, and I say it not because jobs don't matter, but because inflation is so hot right now outside of the job market that's where the Fed is going to focus. They've got their dual mandate, right? Inflation and maximizing employment. Employment, to your point, if you want a job, you can get it. Period. End of story in America right now. But they can't do much about $110 oil.
No. But by the way, that's a really important point. They can't do anything about energy prices, right? I mean, that's monetary policy is a sort of a blunt tool, as we love to say. And look, I could see a dynamic as the year progresses, where in particularly over the sort of the next couple of months, where you still have an acceleration in headline inflation, but you actually have some stabilization and even slowing in core inflation. And that puts the Fed in a really tricky spot, because at the end of the day, really core inflation is really what matters most, right? I mean, it's, it's underlying inflation. It's the thing that the Fed can control. But the Fed, because they're so far behind the curve right now, and because they're really trying to earn back some inflation fighting credibility, you could see a dynamic where they're really much more focused on headline inflation, which again is an irony because there's not much they can do about the energy side of that.
Yeah, and I agree, the Fed behind the curve. In fact, I mean, they blew it. Let's just be perfectly clear. Now, to be fair, it wasn't their fault that Congress threw trillions of dollars at the pandemic and lockdowns, not realizing that the consumer might react in a different way than they did. So is there any way the Fed can put out the inflation fire without destroying the house?
Well, I think it's going to be tricky. I think if they're very focused on inflation, and inflation is going to remain elevated for at least the next handful of months, which is what we expect before it does start to slow down, it really depends how aggressive they get. If they get very aggressive here, then yeah, I think they can actually cause some damage in the months to come. But you heard it the other day too. I mean, I've been doing this for 25 years. I've never heard a Fed official or Fed chair say exactly what was going to happen at the coming meeting. I mean, he effectively preempted the next meeting. So, it sounds like they don't want to get aggressive here. But they, as he said, they've reserved the right to get aggressive. But as I said on your airwaves not too long ago, I just think they need a little bit of patience, because it does seem to us that inflationary pressure is going to start to slow down as the year progresses. And I think that patience could be rewarded for them.